Hello traders and welcome to another video review. Today is Wednesday, March 5th, 2025. Let's take a look at the economic calendar for today. GDP data from Australia beats the expectations. 0.8% was the previous number, forecast 1.2%, actual number 1.3%. Services PMI from Japan beats the expectations. Last number 53, expectations 53.1, actual number 53.7. Services PMI from China beats the expectations. Previous number 51 points, forecast 50.8, actual number 51.4. Russia services PMI down from 54.6 to 50.5. CPI in Switzerland up from minus 0.1 to 0.6%, and then suddenly we are entering the zone of the composite services PMI data that are scheduled for release from across the Eurozone since 9:15 to 10 o'clock. At 10:30 we got services PMI data and composite PMI data from the UK. Then we got the US session. We start with the ADP Nonfarm employment change. Yes, it's this time of the month when we enter this kind of data. We should expect this kind of data because it's the first week of the new month. So Friday is non-farm payrolls Friday. But first, ADP Nonfarm employment change, 2:15. Then we have the data from the Canada labor productivity, then some speeches from the Bank of England members. Governor Bailey will give a speech, and then MPC member Peel will give a speech. Both of the speeches are scheduled for release at 3:30. 3:15 we got the S&P Global Services PMI data and composite PMI data scheduled for release. Please notice, services PMI are expected to dip from 55.9 to 49.7, which is below the level of 50, the level that separates expansion from contraction. ISM non-manufacturing employment scheduled for release at 6 o'clock together with non-manufacturing PMI. 30 minutes later, crude oil inventories and cashing crude oil inventories, and then we have at 8 o'clock beige book, and at 9:30 we got Reserve Bank of New Zealand Governor Orr to give a speech. So US session very busy and full of the important data releases. And the London session full of the releases of the services and composite PMI. Very busy day ahead of us. Let's just go to the charts. We'll start with euro dollar. So euro dollar, hola, euro dollar. What is going on here? We have a breakout above the supply zone. We are back inside of our channel. We need to make some adjustments to our situation here. So maybe what we should do is to extend some kind of projections we got according to the Elliott wave patterns, right? So as you know, we got this ABC XABC pattern here, so it looks like there is nothing wrong about it, but maybe just where we completed the wave C, we should do the wave W. So that's a complex correction. Now we got the wave X, and we are waiting for the wave Y to the upside. Let me just move the wave Y to the upside. There you go. Once again, another attempt. Here we are, wave W with the top here, right? As you remember, wave X and wave Y to the upside. It looks like the wave Y is very impulsive, so that might be like a I don't know, some sort of the, let's say, double zigzag or something like this. The thing is that we need to remove these levels here. They are not necessarily needed right now. Okay, so we got a breakout to the upside. Extremely overbought market conditions right now on the euro dollar. We switch this level here to the demand zone, the regular demand zone. So this is now all green, and of course the zone will be labeled as green as well. There you go. We hit the technical resistance at 1.0631. Very big movement to the upside. So when we switch to daily this time, you can take a look here, and when we switch to daily, what we will do next is we will place the Fibonacci retracement level. So from the top to the bottom, how much did we actually retrace of this big swing to the downside? It looks like we retraced already 50%. The 50% is located at 1.0695. Let me just place the black line here so we can see it clearly. So that's the 50%, and the 61% is a little bit higher. 61% is located at 1.0808. Okay, so those are the two most important technical resistance. Fibonacci levels. Now 1.0630 will now act as the technical support. So we are trading above the 100 periods moving average, and now the target might be 50 or 61% Fibonacci retracement level. It still doesn't actually looks like a bullish wave. It looks more like a complex corrective pattern to the upside. So please stay focused on the current developments. If euro dollar is going up, what is the US dollar index doing? That's the question. And the US dollar index, as you can see, doesn't do much on daily. On the 4-hour chart, it's going down like a stone. So it's not the strength of the euro dollar, is the global weakness of the US dollar across the board. Look at this. We are now, let me just zoom out even more. There you go. So you can see we are now moving even lower. Do we have the, yes, do we have the bottom? So let me just place another Fibonacci retracement from the top to the bottom. So how much did we actually retrace of this big swing to the upside? Something like this. There you go. And we now know that let me just zoom out. I can't zoom out anymore. And this is the 50% Fibonacci retracement. So it's a 105.16. Let me just place the black line here, and of course the 61% is here, 103.95. If we go back to the newest data, we can see that we retraced 50% already. We retraced 50% already. The next target is 61% for this movement to the upside. We are far away from any trend line. We are far away from any other important technical analysis indicators. So we are just changing the colors from there you go. This is the green now, and that's the technical support. So yeah, basically we just broke above another technical support. Oh, yeah, it's a local one, but we still broke below this. So now it's 105.39. That's the level. Please notice that we went straight from the extremely overbought conditions around 107.63 down to the extremely oversold conditions. So big swing in the sentiment on the US dollar index. If the US dollar index is going down, what is gold doing? And you can take a look here. The gold doesn't do much. We are testing the 100 periods moving average. Momentum is strong and positive. However, there is not much here for the gold. It looks like the technical resistance levels had been all violated between 2886 2876. So we got now the slight demand zone here. Nevertheless, there are still some problems with the technical resistance at 2917, but because it looks very, very nice these days, and it looks very, very strong, the gold looks very, very strong, we might see another swing high made very, very soon if the global weakness of the dollar will deepen. So the level of 2955 might be next one to be of course tested. And last but not least, let's take a look at the Bitcoin, and a daily 4-hour time frame chart is showing us possibility of the test of the recent supply zone. So we got this local low made at 81,426. We got a bounce back towards the neutral level on RSI, but this means that we tested the lower supply level. We are still below the supply zone, below the trend line resistance, below the 100 periods moving average, and we are consolidating the recent bounce gains at around 87,600. Dollars. The overall outlook remains bearish as long as we trade below the supply zone, below 100 periods moving average, and of course below the trend line. Only sustained breakout above the 95,000 basically dollars might be considered bullish, and breakout above $99,432 would confirm the bullish outlook for the Bitcoin. Otherwise, the outlook in the short term remains bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.